Hi and welcome to a weekly outlook. It's on Monday for a change. Now I've missed a few Mondays. I've managed to do it on a Tuesday. This week I've actually doing it on a Monday because I'm busy. So yeah, that makes sense. Let's have a look at the fundamental sentimental news, but we'll look at the fundamentals first. Today we've got pretty little. We've already had the manufacturing data out this morning for the UK. That has come in slightly lower than expectation, and has seen the pound selling, but the pound selling for more reasons than that, which I'll come on to in a moment. But okay, what else have we got here then? This week, an important numbers coming out. Aussie dollar, we've got the cash rate. It's not expected to increase this time, and there was a statement, I think in the last statement I should have gone and had a quick look at it, to say that they had no intention of increasing it this year. So anyway, that may we'll see what comes out of that, but we can't second guess it, of course. Construction PMI then on Tuesday, another key-ish. It's a slightly finally they put it in orange instead of red. Okay, construction PMI there, a middling number for the UK, but still important at the moment regardless. And inflation report hearings later in the day there. You've got the governor, the Australian Reserve Bank of Australia governor, speaking there at 10:30 for Save Your Trader on the Aussie dollar. Watch out for that. Side of that then, manufacturing data starting to come out for the US. Bank holiday of course today. Moving through the rest of the week then, GDP Q on Q. Okay, so big number there for 2:30 on the Wednesday for the in the morning there. Then we got the big number following through on the UK for the services PMI at 9:30. Bank of Canada rate statement as well on Wednesday. So we've got Wednesday afternoon, and there's a statement but no press conference following that. So anyway, it's expected to stay pretty much where it is. This statement may give us any further guidance there, but expects volatility tomorrow afternoon there on the Canadian dollar. Non-farm payrolls were a day late. It's the ADP's day late anyway. It's coming out on the Thursday instead of Wednesday, and we've got the US non-manufacturing or their services data coming out on Thursday as well. So it's just a slid a day, these numbers for the US this week. A number seems to affect it. Obviously, got more chance of affecting the Canadian dollar than anything else. Is crude oil inventories there at 4 p.m. this Friday. 4 p.m. That's later than normal. And then moving through, of course, it's non-farm payrolls this week on Friday. So we've got the Canadian and US figures out together there at 1:30. So biggish week. The markets will certainly be looking towards those non-farms at the end of the week there, but it's a bit more of a squashed in week, so I expect Tuesday, Wednesday, Thursday to have a bit more volatility maybe. But as that said, we've had probably one of the best Augusts in terms of volatility for a while. Certainly hasn't died off as previous Augusts. Right, let's get on and look at the individual currencies now. And then I'm just going to look briefly at the S&Ps, may touch on gold if we've got time. So euro dollar. Now I've got a bit of a mixed bag going on here, and it's a bit of a strange one. I'm looking at a weekly picture here, which is bearish looking with this downward trend. Okay, it broke the trend the week before last, and it managed to spend most of last week up above that level, but it's run into its weekly 21. Is this the end of the push up? It's pretty close to those prior highs as well. That last week's high there was pretty close to the prior highs. I did expect that if it did push through there, it might have gone got a good bit of traction and may have gone up to that weekly 50. However, it's not doing that at the moment. But here's an awkward story. There's last month on the monthly chart. It's a nice bullish hammer, which may suggest further upside. So there's a bit of conflict between these two time frames. Which one's right? Well, we'll see as we run through the week. But certainly be prepared that it could go certainly either way. At the moment, I've got a number of figures above the current price that I'd like to see, and also one below it. So and well, we'll look at those now. We've got the weekly pivot sitting below us. We've just got the the monthly pivot below us, the weekly pivot above us. So a couple of figures I'd like to see here at some point. At the moment, I was looking for the weekly to sell into a move to the downside, looking at the weekly picture with the more bearish signal. When you start looking at this daily chart, of course, it's a bit the other way with some a bullish flag, so sitting on this weekly chart. So there's probably two to one at the moment, more possible bias towards the upside, but we'll see how we go. It could just end up in a bit of a choppy week. Let's have a look at the sentiment on the euro from the larger traders here. A few short positions reduced there, as well as a few longs, and it's a pretty flat net position across the leverage funds. So the asset managers, the big institutions, really just keeping their long positions. It's still 2 to 1 on the long side there, or just a little bit more than 2 to 1. The leverage money still bearish. Both sides reduced, so it just remains the leverage money is leverage funds. Hedge funds are still pretty bearish on the euro. So a bit of, as I say, conflict there as well. No one can really make their minds up. So that's where we are with the euro. As I said, technically, it could go either way, and we maybe just sort of drawing into more chop this week when it is as it is. So we should come back. Keep on the subject of the euro for a moment. Of course, the downside sort of, I say worries, but it's not a major worry. But the Italian debt ratings were reduced, downgraded by Fitch on Friday. So that's sort of the drag onto the euro at the moment. How long they'll be sort of remembered for is another thing, and well, that might come out of people's thoughts, and we could see perhaps, as I say, that bull flag running. So I'm not holding on to that too much. Now the pound, I'm going to talk about the concerns. Of course, it's Brexit. One day Garnier is suggesting positive things, and then a couple of days, 2 or 3 days later, he's suggesting that May's suggestions from Chequers suggestions have got no chance for working, and of course we see the gap, and that's what we've seen so far. Let's just come out the time frame a little bit and look at it technically here. So it's weekly wise, we pushed up just through the weekly 8 and hit the upper bands there. Bearish sort of signal maybe, and we could be seeing some more downside. Let's just have a quick look at the monthly and see how we're sitting there. Well, again, there's a bit of a hammer there, but it's closed outside and lower than the bands there. So maybe it's still in that continuation to the downside here. It certainly looks like it. Maybe even a shooting star hanging there on the weekly. So it's a more bearish view there. Now I'm going to just bring a 4-hour candle chart up just so I can see a little bit more, share a little bit more. We do have the weekly pivots above us here, which may be a bit of a draw, and the monthly pivot, well, that's been done actually. So the monthly pivot's done, so it's just the weekly pivots above, but there is a gap, and you can just possibly make it out. We probably can't at all, but there is a gap above us. There's always a chance when there's a gap to see it filled, but we'll see. It does look bearish to me overall, though. And there's the thing with the pound at the moment. I keep on saying this. It's just all about risk in terms of, yes, we've got some key numbers coming out this week, but there's risk in terms of Brexit talks, and the more that we push towards October, and then if it gets extended towards November, it's going to be hardball one day, friends and lovers the next, I'm sure. So it could go, just as you get short and get into a nice short position, Barnier can become our best friend again for a day or two. Right, so there's the risk. Right, let's move on to dollar yen, and look, actually let's take that right up to the weekly side of things and look at where we, oh sorry, sentiment, I missed out on cable on the way through. I just talk about sentiment on there. Still, just take the big picture here. Look, it's bearish, bearish sentiment across asset management and leverage money, much the same. Has it changed much? Yes, it's, oh no, it's got slightly less bearish on the asset managers. That may have been no, it's after, but yeah, post B. But short positions come off, long positions come off a little bit here on the asset managers, so they were a little bit more bullish. Well, it's gone to proper bearish there at the moment. Right, let's look at the Japanese yen now. Sorry. So where do we sit on here? Well, sentiment from the asset managers, neutral. They've balanced their books there, and it's pretty neutral anyway on the asset managers. Hedge funds is still 2 to 1 on the short side of things, so and that's pretty balanced as well. So all pretty balanced, erring most likely edging towards the short side on both those, the sentiment, but nothing significant. Now when you come back to the weekly charts then, I don't know if it's worth going out to the monthly. We'll have a quick look. There we go. It's, well, actually, to put a little hammer, shooting star 1 week, 1 month, hammer the next. It really shows, it sums it up pretty much. It's in this more consolidated phase again, maybe at the moment. We're seeing the yen used as a when risk comes off, the money goes back into the yen. When it comes back on, we're seeing it come out of the yen. We're seeing some good moves on the euro yen, as I said on the weekly update. I'm not going to go into that on the sorry, daily updates. I'm not going to go into that today, but it may provide some better moves because of just the way this is moving at the moment. The yen's moving, or the way the yen's being used. So well, upper bands, it may come down to the lower bands as it is at the moment. It's got potential to sell off. It's straight into the monthly pivot here. Weekly pivot's ticked. Might pitch up short term to the upside, but all in all, to me it looks like it could be consolidation. There's the potential of these markets, and Trump does what he normally does so well and over chats. There's the potential for it to come back off again some more. As I say, the sentiment for the bigger traders is the yen to lose become weaker, in which case we would see it shoving up against the US dollar here. So consolidated phase for me. Right, Aussie dollar. So now just a reminder why the Aussie is so weak. Well, their biggest trading partner is China, of course, and China's struggling a little bit at the moment. So the sentiment probably isn't so good. Let's have a look through here. So the Australian dollar here, sentiment wise, well, you can see it's short, pretty strong sentiment, negative. It's not to an extreme point of view where we would sort of say, well, actually these markets have got long-term extreme, but it is getting when you sort of got nearly, what's it, 6.530s, 6.60s, 36, yeah, nearly 6 to 1, over 5 to 1 on the short side there, and more than 2 to 1 on the leveraged funds there. Changing direction, not a lot here. Maybe just a little bit more reduction in short positions, which may see us a bit of a slowdown. It might be the beginning of a change. We'll see as we go over the weeks, but obviously it's a slow measure of sentiment. So the weekly, they're not really showing me too much, and apart from looking, let's put a bearish pivot swing in, which has been triggered through the Asian session of this week, or the early part of this week. But at the moment, we're seeing a bit of a bounce. We have got the daily, the weekly and monthly pivot sitting above us, which could be a draw. We've got data out this week, as I've already said, for the Aussie dollar may get a bit of bounce, but say the risk with the Aussie dollar sits with the negative feeling coming from its one of its major partners. Okay, if that changes and deals start getting made, the Aussie dollar could be one of the first and stronger beneficiaries. Canadian dollar, finishing the majors sector off. Let's have a look on here. Let's look at the sentiment for you first, and well, it's the leveraged money is still pretty bearish on here. See everything all at one go here. 2 to 1 on the longer side for the asset managers, and 2 to 1 or just over 2 to 1 on the bearish side. So there's a lack of agreement here in terms of what's going on. And again, this has been affected largely by, I say largely, but often by oil prices. Oil had been coming off, and then suddenly it's taken a bit of a rebound. These, of course, it's not just that. There's the talks, I call them the Trump talks, but the negotiations with the US, which is should have been holding down more heavily, but well, weekly wise, we did give up some last week, and it's moved much more positive. May have some more upside there. There's lack of clarity in terms of talk of what's going on, and when you come down to the dailies, it's been working pretty much in this sort of range, and it may be I'm just going to extend this over a little bit more and pull it towards the nearest trend lines, somewhere around there anyway. That may become a key resistance point if it does carry on. 2 solid days up last week in the end. There was some weak data coming out GDP wise on the Thursday. Friday saw that through. So we'll see how it runs, but at the moment it's erring more, well, weaker technically in some respects on this point, but it is still in on the bigger picture, lower highs, lower lows, so that hasn't been broken yet. So short term weaker, well, longer term maybe still got some potential to the downside. We'll see how it goes. If it starts breaking this trend line, well, of course then it may soften some more, but these talks and the discussion of the talks haven't helped it at all. That's pretty much it there. So we'll just have a look at the S&Ps. Let's have a look at a different market altogether, and we'll maybe if we get a chance, have a quick look at the Bitcoin for those that are interested in what's going on there. S&Ps, where are you gone? You're there. I've just clicked through it, God knows how many times. Right, so S&Ps. So let's go back to the weekly point of view here. This is the futures I'm looking at here. E-min is 500, and it's gone up and up. Should I have bought in May and just instead of sold in May and bought in May and just left it? That's the trade I've talked about just about every week this week, and it's just pushed up and pushed up and pushed up pretty much. Just a couple of slower weeks there amongst it all, but it's carried on pushing up today. At the moment it's pushing up. There are some sort of possible draws. There's the weekly and monthly pivots sitting below it, which may just draw it down at some point. In fact, a point in the week at some stage, if it gets back to that monthly pivot, maybe it'll be a buy opportunity if it's sitting with some other correlated things such as the 21 there. I know that's been tested before, but it seems to be quite a good one for it. So it still looks relatively bullish from that perspective. Let's have a look at the sentiment on the S&Ps. Sentiments though, big boys are, look, they've literally moved their short positions to more longs, so just shove that across. So it's bullish from the asset managers, and of course the leverage funds, as it makes new highs, start shorting it stronger, although there's some obviously not so keen on it, but significantly bearish still on those leverage funds. And you do wonder, the more that these sit up, the more we'll just push up, and it will give the hedge funds even more of a hard old time there. Of course, they could be hedged positions indeed that we're seeing with them, so we'd have to draw on that carefully. But at the same time, as I said, it looks to me trend-wise still positive. Yes, it could pull back. It could be a nice buy come back if it comes back towards that monthly pivot. US data, of course, will drive that. Trump will drive that, and it's driven it pretty well so far. So that's it for me, almost, apart from I did say I would just have a quick look at Bitcoin. So here goes, quick look at Bitcoin there. In terms of what we've seen, let's go out to the weeklies here, and actually I need to go to a slightly different Bitcoin because I need to get my futures one. Here we go, and there we go. That's a weekly view of things that's come into the dailies because it's not really got a lot of data there at the moment. But we had a couple of gaps in the last month there. We haven't got new, unless the pivot is just where the pivot is here. It's not corrected the pivot here at the moment. It's still actually showing you going up to the 31st of the 8th. So I haven't got the new data here. At the moment, so no extra data come through on here. It's definitely only the 31st of April. It's delayed, okay, but no new data. But what it was suggesting is last week, well, it was pushing up, had a couple of down days there. Started, well, we'll see. As I say, I can't see what the data is today. It's not fed through for whatever reason, but it's still got that other gap above us, and it may well just run it back up to what was the old monthly pivot there. New monthly pivot will certainly be down below where price is, but maybe correct that during the week and just give a bit more uplook on Bitcoin during the week, on one of the weekly outlooks, daily outlooks rather. Right, that's pretty much it for me in that case. Have a great week. Bye for now.